Hello there. It's an honor to be with you here today in this beautiful setting. I am going to talk for the next few minutes about the disruption of the single most valuable industry on planet Earth. You might think that's healthcare. Healthcare is a $4 trillion global industry, vitally important, of course, but energy is a $6 trillion a year industry, and it is being disrupted right now. And that disruption matters because energy isn't just an economic issue. Energy is a moral issue. We're in the 21st century, and yet 1.3 billion people on planet Earth don't have electricity. And that lack of modern energy correlates with most of the human ills that exist, the presence of disease, hunger, starvation, conflict. So this is a moral issue for us to address. At the same time, the way that we create energy today has its own downsides. The World Health Organization estimates that air pollution from the combustion of fossil fuels kills 5.5 million people a year. That's 10 times the number of deaths each year from murder and warfare combined. So we need to do something different. Fortunately, disruption is coming, and let me give you an example of that disruption happening today. This is Peabody Coal. Peabody Coal was a $10 billion corporation, the largest, most valuable private sector coal mining company in the world. Peabody Coal went bankrupt. In the span of just 3 years, they went from the peak of their revenue to Chapter 11 filing in the U.S. And it wasn't just Peabody. It wasn't just one company. We had a half dozen companies in this same area, Arch, Walter, James River. The global Stowe index of coal stocks dropped 90% in the span of just a few years. It's bounced back a bit now. It's only 75% down. If I'd had the courage of my convictions in 2011 to short this, I would have made bank. That didn't happen, but we have opportunities still today. Now, this disruption didn't happen because we suddenly stopped using coal. Coal is still the number one source of energy on planet Earth. But what happened was that the consumption of coal that had risen continuously for 150 years stopped. Coal consumption on planet Earth peaked in 2013 and has declined since then. Now, that decline was ominous because these companies took out large amounts of debt to fund new coal mines, fund new operations, betting that there would be higher demand to meet that higher supply. And instead they found themselves in debt as the demand crashed. And with more supply in the market, low demand, the cost of the commodity crashed. And that's what led to this decline. Now, some of that was driven by innovations in natural gas extraction, but this disruption is now going global. And what's driving it overwhelmingly around the globe is the rise of clean energy. Let's start with wind power. Wind is a hundreds of years old technology, but it has revolutionized itself in just the last few years. In Australia, the price of wholesale power on the grid is about 6 to 9 US cents per unit, per kilowatt hour. And energy is an economic issue. It's a fungible issue. People are going to buy the cheapest energy. In 1980, wind power cost nearly 10 times what coal or natural gas cost. Yet over that time since then, the price of wind power has declined by an enormous 15x. So in the US, we now have deals being signed at 1.8 cents. Now, take out the subsidies, it's 4 cents, still cheaper than coal or natural gas. In fact, if you look around the world, in every market around the world, the cost of wind power is declining. And in fact, in 2016, this chart is already outdated. We already have prices below this. Now, the lowest wind power price in the world as of last week was in Morocco with no subsidies, 2.8 US cents, half the price of wholesale power in the grid. Mexico is having a power auction right now, and based on data yesterday, they might have set a new record just this week. I have to update these slides almost weekly. So wind power has gone from being a footnote in the global power mix to being about 4% of worldwide electricity. It's grown 650% in the last 10 years. And as it grows, it gets cheaper. The best way to predict the price of a technology is to look at its scale. On the horizontal axis here, you have the scale of wind power, and on the vertical, you have the price. Wind power declines predictably about 20% in cost for every doubling of the industry. And that means you have a virtuous cycle. At first, any new disruptive technology, whether it's wind power or solar or biotechnology or AI, is extremely expensive. and you can have only a few markets that are willing to pay that premium for the technology. But your first customer brings down the price. You can reinvest in R&D. That lower price allows you to tap in to a new market that's more price sensitive. That scales the industry, and that brings prices down again. And so we're seeing this pattern happen again and again. Now, if you really wanted the best, fastest winds on planet Earth, you wouldn't stay on land, you'd go offshore, because on the coast is where the wind blows fastest worldwide. And here in Australia, on the southern coast around Melbourne, you have Class 7 winds. These are the best wind speeds around the world, or on par with the very best around the world. 2 or 3 years ago, I believed offshore wind power would never take off, because building these things out at sea while the wind is good is incredibly expensive. You have to anchor these pylons in the ocean bottom and so on. But that has changed and surprised even an optimist like myself. In the last year, we had 2 developers bid on 3 projects in Germany in the North Sea and bid 0 subsidy. So they will produce offshore wind power at wholesale market prices competing with coal in the north of Europe. And the winds here in Australia are every bit as good as the winds in the North Sea. So we've had a 4x price decline in offshore wind in just the last 5 years. It's staggering what's happened in this sector. So the price of wind will keep declining, but here in Australia, the most exciting thing to talk about is what's happening with the sun. The sun bombards our planet with 10,000 times the energy that civilization uses. With current solar panels, just 1% of the world's land area would meet all of our energy needs, period. What's blocked that isn't an availability of land or of sun, it's been economics. Solar panels have been heroically expensive, if you will. But that has changed dramatically over the last 40 years. The price of a module of solar power of 1 watt has dropped by 250x. This is physical infrastructure that's dropping in price almost like a digital product. Now, the first 100 times price reduction didn't matter because it was still more expensive than coal or gas. But now we're hitting the crossover point in just the last 2 or 3 years, where in sunny parts of the world with no subsidies, solar is simply the cheapest energy you can buy. Let me show you. Again, in Australia, the wholesale power market, 6 to 9 US cents per kilowatt hour. In the southwest of the US, the most recent record low price, 4.3 cents per kilowatt hour. That's without subsidies. With the subsidies, it was about 3. In the US overall, the price of 20-year solar power contracts has dropped by a factor of 7 over the last 8 years and continues to drop right now. In India, the market where people most hoped that coal demand would go up, right? The only market left, we thought, besides China, who's now stopped their coal consumption, the price of solar hit 2 record lows this year. The lowest of those, at 3.8 cents, is 20% lower than the price of a new coal power plant, about lower in price than a quarter of the operating cost of India's current coal fleet. We had a 4x reduction in the price of solar in India in just 4 years. In Chile, close to the equator, solar has swept power auctions again and again. 2.9 cents is the record low. In Mexico, last year in a power auction, the average price of a solar bid was 3.2 cents, half the price of coal. The lowest price was 2.7 cents. But my favorite example is actually this one. So I love this picture of people who are probably well invested in oil standing around this solar field. In Abu Dhabi, last September, this new record low price was set for the second tranche of this 1.3 gigawatt plant, a gigantic plant, 2.4 cents a kilowatt hour. Now, this wasn't just the cheapest price for solar. This was the cheapest unsubsidized contract for electricity ever signed on planet Earth with any technology. And it wasn't just one rogue bidder. There were 4 bidders that came in at under 3 cents. And the price continues to drop. In fact, just last night, so recently I couldn't update my slides, the results from Mexico's power auction came out, and it looks like there are 2.1 cent contracts for solar in Mexico. So the price of solar is plunging in every market around the world, including Australia. Australia is probably still more expensive than it should be for its sunshine, but it will continue to drop here. Now, I told you that wind power grew 6.5 times in 10 years. Solar makes that look slow. 50x growth over the last decade. In fact, it's been exponential growth. And again, this virtuous cycle kicks in. Now that solar is cheaper without subsidies in sunny parts of the world, it will scale. And as it scales, its prices will come down, making it more affordable in other markets. In the US, I live in Seattle, the least sunny part of the lower 48 states, not a lot of solar, but it's starting in the southwest and west, and then it's spreading across the south of the country and into the Midwest. Globally, solar started in Europe for reasons that have more to do with political will than anything else. But those 1.3 billion people who don't have electricity, where do they live? Overwhelmingly, they live in sub-Saharan Africa and South Asia, and some of the sunniest parts of the world. They will have the cheapest energy on planet Earth. And here in Australia, you have one of the sunniest places on the entire planet. And this is a massive opportunity for Australia as well, to bring down electricity prices, to make the cost of manufacturing goods incredibly cheap. Now, in Australia, the amount of solar deployed has skyrocketed since 2010. Now you have more than 6 gigawatts of solar deployed, which is fantastic progress. But let's just compare that a bit. So solar really got started in Germany. The German people made a political decision that they wanted to go clean. They paid about 10 times as much per unit of solar power as we would today. And the poor Germans live in a place with about the same amount of sunlight as Alaska. All right, so this is not where I would have put solar panels, but they have 40 gigawatts of solar. They're now number 3 in the world after China and the US, but they were number 1 for quite a long time. That's 6 times as much as Australia has. Now let's just compare these two places for scale. Here's Germany, and here's Australia. So this little corner of Australia has as much sunlight as all of Germany. Now I'm told only 3 people live in that corner of Australia. Might have to move a little bit east, but we can transmit power. So solar power also will keep getting cheaper. Where this is not an endpoint, this is a transitional price. It may drop in price half again over the next decade or so. But the place that's now most exciting is energy storage. Storage is the new solar, if you will. You all know who this man is? Tony Stark? Right. So Elon's the closest we've got. Elon here is introducing the Tesla Powerwall battery. In the first week, they took $1 billion in pre-orders for this product. And the funny thing is, it's not really Tesla technology. It's actually a whole lot of Panasonic cells inside. So Elon has many things. Among them, he's a brilliant marketer. But it wasn't just a sudden scientific discovery that brought down the cost of batteries. It's been a steady, exponential decline in cost for decades. In just the last 7 years, since 2010, the price of batteries, lithium-ion batteries, has dropped by a factor of 5, since just 2010. And forecasters missed this completely. The yellow line is the forecast of the U.S. Department of Energy. The blue and red lines are private forecasters, Bloomberg New Energy Finance, for instance, who are much more optimistic about how fast the price of batteries would drop. The actual price drop of batteries has been twice as fast as those optimists predicted, and batteries today are cheaper than the U.S. Energy Information Administration thought they would ever get when they forecast this in 2013. So bet on the innovators and not the forecasters. We all have status quo bias. When we have too much expertise in an area, we believe the future will look like the present, but in technology it doesn't. Right? Now, I know there have been some issues here, right? In South Australia, you had a fairly massive power outage, and this happened. This is Lyndon Reeve. He was the CEO of Solar City, and after the merger with Tesla, he ran Tesla's energy storage. And he gave an interview where he said, look, Tesla can fix the outage issues with big battery banks. And an Aussie, who I think might be in the room, or you'll see him later, Mike Cannon-Brooks, took to Twitter and said, hey, mate, can you really deliver on this? He also asked for mate pricing from Elon. And Elon replied and said, yes, we can build this. We can build this in 100 days, or Australia will get it for free. Pretty good deal, right? So the 100-day counter started ticking on October 1st, and Tesla got ahead of the games. They already had their factory half constructed by then. This will be the world's largest battery deployment anywhere on Earth by about a factor of 3, at least so far. Eventually we'll see battery deployments that dwarf this, but now in South Australia you're really working with a pioneer to move forward. So solar prices are in green, battery prices are in blue. Battery prices drop at almost the same rate as solar. Every doubling of scale reduces prices 20 to 25%. So battery prices will also keep dropping. But I want to pop us out of this for a second, because we've always assumed that clean energy was going to be the most expensive energy. Right? We're doing it for moral reasons, for our kids, for air quality, for climate. But if you pay attention to this trend, the price of energy fluctuates, but the price of technology just does what? Technology only gets cheaper. And now even very conservative organizations are seeing this. This is the IEA, the International Energy Agency, the world's experts on energy. And the IEA is not what I would call an exponential organization. Okay? Let me demonstrate. Let me show you the IEA's forecasts for how quickly solar would grow around the world. You have to read from the bottom. In 2002, in their World Energy Outlook, 2002, WEO, they forecast we'd have 50 gigawatts of solar around the world by 2030. We have 300 gigawatts deployed today. In 2004, they said, we were a little bit off in our forecast, we should lift them. In 2006, they said, sorry, we're still a little bit low, we'll lift it. 2008, we're still a little bit low, we'll lift it. It's like some analyst is looking at their spreadsheet and hitting Control-C, Control-V, right? The IEA forecasts linear growth. They say we'll install the same amount of solar every year henceforth, when in fact the amount we install every year is going up 35 or 40%. Yet even this organization that has never once been right about solar, that's been too conservative, every single forecast they've made in the history of their existence. Are there any IEA people in the room, by the way? I'm safe for one more day. Even this organization says solar will be the largest source of energy by mid-century, and will have 4 cents a kilowatt hour. We've seen that we've already beaten that. So they're right on their forecast, they're just off on the time. Right, I prefer this forecast. This is AllianceBernstein, a private equity firm in the US. And AllianceBernstein put out this report, or this chart in a report, 3 years ago now. They called it Welcome to the Terror Dome. And across the bottom, they have the cost of oil, gas, and coal. And what's that across the right? It looks like somebody's kid took a crayon and scrawled in their parents' report, right? That's the cost of solar. This is a 70-year chart. That's the cost of wind, and that's the cost of lithium-ion batteries. This is what disruption looks like. This starts to look like a Kodak moment, if you will, for the energy industry. Now, I'm not going to lie to you, it's not like the digital revolution. It won't happen that fast. We build power plants to run for 30, 40, 50 years. Change takes time. We're approaching the moment where solar and wind dominate all new energy production, but deciding to decommission old plants will take us quite some time. Nevertheless, the disruption is happening right now. In January of this year, China, the world's largest coal consumer, canceled 104 planned coal power plants. That number rose to 151 over the span of the year, about $80 billion of investment value. The plants in red had already broken ground, had already started construction, 40 of them. Billions of dollars, we don't know exactly how many, billions of dollars of sunk cost just wiped away, never to be recouped. In 1 month this year, in June, India canceled 14 gigawatts of coal power, $8.9 billion of investment. And the answer given was clear as day. Solar prices are in free fall in India. So why would you build a coal power plant when you know it can't compete a few years down the road? So the pipeline of new coal power plants in just 12 months, from 2016 to 2017, has basically gone to zero. We're not quite done building new coal power plants, but we're very close to the moment where we will just not build any more whatsoever. More news. Last week, Rio Tinto, large mining corporation, partially Australian, said they're going to divest of all of their coal mines. They no longer see it as a profitable business. They're selling all of it off. Now, I know there's been controversy about a mining operation here, the Adani Carmichael coal mine. And I will tell you that the only way this mine makes economic sense is if you assume that that reversal of coal consumption is going to halt and that coal consumption is going to start rising again. And that is a bet that the price of solar and wind will stop falling, and in fact, they'll have to get more expensive to make it make any sense for us to rise in coal consumption around the world. And that, for both the mine and the port, doesn't seem like a sound economic bet to me. But the issue is actually larger than just the Carmichael coal mine, because Australia exports something like 27 billion US dollars worth of coal each year. It's a natural resources economy in large part. And this is something that Australia needs to diversify out of if you want to survive and thrive in a global knowledge economy rather than a resource economy. Now, how do you take action in such a face of disruption? Well, I haven't even told you really the half of it, because there's another side of the disruption. The planet's heating up. We know that. We've had 3 record hot years in a row. 2014 was the hottest year measured on planet Earth. 2015 blew that away. 2016 edged that out. 2017 won't, actually. El Nino years are warmer. We'll have a few La Nina years, probably. It'll go 5 or 6 or 7 or maybe 2 or 3 or maybe 10 years without a new record. And then we'll set a spate of new temperature records again. That's how this system works. Nor have I talked about the damage happening on the Great Barrier Reef. I'm a diver. I've had the privilege of diving this, and I've seen this change with my own eyes. Right? There are real problems happening. There's another side of this. If the world decides to stay under 2 degrees Celsius, as scientists tell us we must, then we can only burn about 1/4 of the world's known reserves of coal, oil, and gas. That's the only thing compatible with it. So 3/4 of that resource have to stay in the ground. Well, that resource is on corporate asset sheets. It's on national asset sheets. Is this a bubble? Think about the housing bubble. When the value of houses dropped, it didn't stay contained to just the housing sector. It took out sector after sector around it. In fact, this bubble, 22 trillion here is the estimate from Carbon Tracker. Citi believes it's much, much larger. Citi believes the total value of all assets that can't be realized, can't be burned or utilized in a 2 degrees Celsius world is around 100 trillion US dollars. I've never seen a dollar figure so large, actually. But, as the Chinese say, crisis is both danger and opportunity. In destruction, there is an opportunity for creation. The world is spending about $250 billion on clean energy deployment this year. I'm an investor. I find early-stage startups, and I help them accelerate this change in a way that turns them and me a profit. With an exponential increase in the value of this technology, the decline in price, and Australia's massive natural resource, this is an opportunity for Australia as well. In the new world, labor costs are evening out, and energy costs will be one of the factors in who can be a manufacturer at scale. And Australia could be the nation with one of the lowest energy costs on the entire planet. I teach at a place called Singularity University, where we talk about the use of exponential technologies to solve humanity's grand challenges. Technologies like artificial intelligence, genomics, 3D printing, and yes, energy. In fact, we're having an event in Sydney in February if you want to come learn more about those technologies. And the innovation in technology is a big part of what gives me hope, because the situation is quite sobering, and yet we have done such incredible things with technology in the past. I will close with this anecdote. I went to the University of Illinois, Urbana-Champaign. This is ELIAC, the world's second digital computer, built in 1943. It calculated artillery tables in World War II. That next to it is an iPhone 6, already outdated technology. ELIAC filled a room about this size. It weighed tens of tons. It drew tens of megawatts of power. The modern smartphone weighs tens of grams and draws milliwatts of power, yet it is millions of times more powerful than ELIAC. If we wanted to build something as powerful as my phone using ELIAC technology, it would be larger in footprint than Sydney. It would be miles tall. It would draw more electricity than all of Australia, and you have to import some. And it still couldn't Snapchat or play Angry Birds or anything. That there would be no one to Snapchat to, because it would take the entire global economy to build one of these. But I want to ask philosophically, how is it possible that this device that is so much lighter, less matter, less energy, can do so much more, can do millions of times more? Isn't this a violation of the conservation of matter or conservation of energy or something? Isn't it intuitively wrong? My answer is this. This device is not made of matter. This is not made of silicon or glass or plastic or rare earth minerals. This is made of information. This is made of human knowledge. This is made of accumulated scientific discoveries, engineering discoveries, design discoveries, and information has a fundamentally different economics than anything else. Because if I break my phone, I don't have a phone. But you can't break an idea. Ideas don't chip or wear out. If I give you, sir, my phone, I'm not going to, I'm not sure I'll get it back, but if I give you my phone, I don't have a phone anymore. But if I give you an idea, we both have the idea. And in fact, the more that we share ideas, the more they intersect and spread and generate new ones. And the right idea, the right knowledge, can substitute for a scarce resource. It can reduce our need for matter or energy or land or labor, and it can multiply the value of every other resource we have. So that, fundamentally, is why I think we have a bright future. Thank you very much.